You're listening to the Financial Source podcast, your daily dose of sentiment updates in the European and U.S. sessions and critical risk event previews so you stay up to date with what's moving the market right now. Each session is carefully crafted personally by the Financial Source analysts and voiced by our AI hosts who, as it turns out, sound a lot better than we do. Here's Rachel and Michael with this session's deep dive.
Welcome back to the Deep Dive. You know how it is, you're scrolling through the news, trying to make sense of everything happening globally, and it just feels like this constant flood of information. Every market move, every political headline seems important. But how do you cut through all that noise? How do you really grasp the underlying forces shaping things?
Well, that's what we're trying to do here today. We're diving deep into a global briefing, really zeroing in on what matters most right now. We'll look at foreign exchange, commodities, global trade, and geopolitics too, trying to connect those dots for you.
And it's amazing how connected it all really is, isn't it? You see something happen, maybe a political shift somewhere, or a central bank changes its tune slightly, and we think, oh, that's just a local thing. But then, bang, you see these ripples spread across markets, across borders, faster than you'd expect. It affects, everything, supply chains, investment. It's all one big system.
Absolutely. So as we go through this today, maybe keep this question in the back of your mind. How are these different global events actually linked? Because I think you'll see they're much more tangled together than they first appear. Okay, let's get into it. First up, the heart of the global markets, foreign exchange.
So the U.S. dollar, it's softened a bit overnight. What's going on there?
Well, yeah, it's still kind of reacting to that weaker jobs report from last Friday. Showed things cooling off a little. But I think the bigger thing right now is the anticipation. Key inflation data is coming out later this week. Markets are trying to guess, what will it show? What will the Fed do next with interest rates? If inflation looks lower,
then maybe less pressure for the Fed to hike rates.
Right.
And the dollar dips.
Exactly. Less yield appeal.
Yeah.
So traders are positioning themselves now, trying to get ahead of that. Classic market anticipation. Okay, makes sense. Now, staying in that currency world, but hopping over to Europe, the euro, it's been surprisingly steady, hasn't it? Especially with all that political turmoil in France. Prime Minister Bayrou lost his confidence vote. Macron's appointing someone new. That sounds like major instability.
It does, yeah. And it's a really sharp observation. Normally, you might expect the euro to take a bigger hit from that kind of domestic political drama. I mean, losing a confidence vote, needing new PM, that's significant internally.
Right.
But for now, the broader market, it seems to be looking past it. Investors often differentiate between, localized political noise and something that threatens the whole Eurozone system, maybe the ECB stance or stronger data from other big Eurozone economies or just general global risk mood. Maybe those things are providing more support for the euro right now.
So the thinking is France can handle this internally without derailing the whole bloc.
For now, it seems that way. It suggests a certain faith in the stability of the institutions, even if leaders change. But, there's always a limit.
Yeah, good point. So what would be that limit? What would make the markets genuinely nervous about France?
Probably things like prolonged political deadlock. If they can't form a government or if the new government's policies look like they could seriously threaten France's finances or its relationship with the EU. If it starts looking like a real divergence from the Eurozone norm, then you'd likely see the euro react much more strongly.
Got it. Okay, moving across the channel to the UK. Sterling's just sort of hovering around 1.35. What's the next big thing for the pound?
Yeah, holding steady for now. The main thing everyone's watching is the UK GDP data that's due out later this week. That's the big health check for the UK economy. It'll really shape how people feel about the economy and what the Bank of England might do next.
So strong numbers might give the BWI more room. Weak numbers could dampen rate hike expectations.
Pretty much. Expect some movement when those figures land.
Okay. Now, this one feels big. The Japanese yen, it surged quite significantly. This is where you said it gets really interesting.
Yeah, I think so. Because for years, the yen has been, synonymous with super low interest rates. The Bank of Japan, the BOJ, just kept policy ultra loose.
Right, the classic carry trade currency, borrow cheap yen.
Exactly, borrow cheap yen, invest elsewhere for higher returns. But now, this surge, It's tied to reports that the BoJ actually still sees a chance of hiking rates this year, even with some political uncertainty there. And some policymakers are apparently even talking about maybe moving in October.
Wow, after all this time. That is a big deal.
It's potentially huge. The BoJ is one of the last major central banks still in that ultra-easy mode if they start tightening. Think about all those carry trades funded by cheap yen. If the BoJ hikes, that could trigger a massive unwinding, money flowing back into Japan.
Which could impact, well, everything, emerging markets, stocks globally.
Potentially, yes. It's more than just a currency move. It could signal sort of the end of an era of super cheap money from a major economy, a fundamental shift.
Okay, definitely one to watch closely. And rounding out the currencies, down under, the Aussie and Kiwi dollars got a bit of a lift.
They did, yeah. Some support there. Mostly came from China setting a stronger daily reference rate for its currency, the yuan fix.
Ah, the China connection. Stronger yuan usually helps commodity currencies.
Generally, yes. Given the trade links, it implies better demand for raw materials from Australia and New Zealand. They export a lot of that stuff.
But it wasn't a huge rally. Something held them back.
Right. The upside was capped because we also got some weak consumer sentiment data out of Australia. So you have this external boost from China, but then internal worries about the consumer. Those diverging forces kind of kept a lid on things.
Okay, so that's the currency picture. Lots of moving parts, lots of anticipation. Now let's link this to the real economy. Trade and technology. Seems like a lot is happening there too. First, some relatively good news. US-Japan tariffs. Looks like some progress.
That's right. Japan's negotiator announced that U.S. tariffs on some Japanese goods, importantly including cars, are set to be reduced by mid-September.
Okay, that sounds positive. De-escalation.
It's definitely a step in that direction for that specific sector. But, and this is important, the announcement also said other parts of the agreement are still unresolved. So, progress on autos, yes, but maybe broader issues like market access or IP still need work. It's not a done deal across the board.
Right. A partial win. Okay. Then, U.S.-South Korea. They're back talking tariffs, but hitting roadblocks.
Yeah, apparently progress there is a bit slow. And the reason cited is interesting. Concerns about how a large U.S. trade package might impact capital markets.
Capital markets.
Yeah.
How does that connect to tariffs?
Well, it shows how trade deals now are about much more than just goods crossing borders. They have complex financial implications. A big package could affect capital flows, exchange rates, maybe even financial stability. So it's not just about the tariff level anymore. It's about these wider economic ripple effects they have to consider. Makes the negotiations much trickier.
Adds another layer of complexity.
Yeah.
And then the big one, perhaps, U.S. versus China in tech. Tensions seem to be ramping up again.
Definitely. We saw the U.S. FCC, the communications regulator, starting proceedings to basically delist several Chinese test labs.
On what grounds?
National security. It's a clear strategic move to limit China's role in tech infrastructure, especially anything seen as sensitive.
And China's response?
Their Ministry of Industry and IT came out pledging to speed up domestic efforts to develop high-performance chips. It's very explicit. This is ongoing strategic competition. Both sides pushing hard for technological independence, especially in crucial areas like semiconductors.
It really paints a picture of, well, you mentioned a potential two-internet world or diverging tech systems.
Yeah, that's the potential long-term path this kind of competition sets us on. Big implications for supply chains, innovation, everything.
Okay, let's pivot now. From tech battles to commodities, always a key indicator. Crude oil prices, dicked up a bit.
Edged higher, yeah. It came after OPEC Plus confirmed they'd stick to a planned, fairly modest production increase for October. About 137,000 barrels per day.
So that suggests they see demand holding up, market fundamentals look okay to them.
That seems to be the signal, yes. Steady demand, healthy fundamentals. But there's a wrinkle.
Oh.
At the same time, Saudi Arabia actually lowered its official selling prices, especially to its key markets in Asia and Europe.
Increase production slightly, but cut prices. Seems a bit contradictory.
It does on the surface, but it could be a strategic move, maybe trying to keep market share or maybe just wanting to keep the price rally in check, prevent prices from going too high and hurting demand or making alternative energy look even better. It's a balancing act.
Right, managing the market. Okay, and then gold? Gold just keeps climbing. Fresh records above $3,600 an ounce. What is driving this?
Gold's run is really remarkable, and it ties back to a lot of what we've discussed. You've got multiple factors pushing it up. First, the weaker U.S. dollar we talk about makes gold cheaper in other currencies. Second, strong safe haven demand.
People getting nervous about geopolitics, maybe inflation's economic outlook.
Exactly, a classic flight to quality when uncertainty is high. And third, a really significant factor, ongoing large-scale buying by central banks. The People's Bank of China is often mentioned. It's partly diversification away from the dollar, partly shoring up reserves amidst all these global tensions.
So currency moves, risk aversion, and big institutional buying. A perfect storm for gold.
Pretty much sums it up. That combination is really propelling it.
What about other metals? Copper, the industrial ones, are they following gold higher?
Not really, no. Copper and other base metals are more range-bound at the moment. Kind of stuck.
Why the difference?
They're much more sensitive to the industrial economy. And right now, they're digesting weaker trade data out of China. China consumes huge amounts of these metals, so if their economy looks a bit shaky, demand forecasts get trimmed and prices tend to stall. Markets are waiting for a clearer signal there.
It really shows how linked everything is to global growth, especially China. Okay, let's shift finally to geopolitics itself. The hot spots driving some of this uncertainty. Middle East tensions, still very high.
Extremely high, unfortunately. We saw Israel carrying out more strikes inside Syria, near Homs, Palmyra, Latakia. That shows the conflict's reach and the risk of it spreading. And critically, Prime Minister Netanyahu warned Gaza residents to evacuate ahead of what could be expanded ground operations.
That sounds ominous. A really critical, dangerous situation.
Absolutely. Huge humanitarian concerns and the constant potential for wider regional instability. It keeps everyone on edge.
Then in Europe, Ukraine, facing serious issues with air defense, while Russian attacks continue.
Yes, that's a major concern. Reports indicate Ukraine is running low on vital air defense munitions, partly due to a U.S. review of aid deliveries. This leaves them more vulnerable, just as Russian strikes, especially on infrastructure in Kyiv, are ongoing. It's a really tough spot.
And the international response.
Yeah.
More sanctions being discussed.
That's the plan. U.S. and European leaders are set to meet this week, likely to coordinate on additional sanctions against Moscow. It shows the continued international pressure, but also underscores the sheer cost and duration of this conflict for Ukraine.
And lastly, North Korea, testing missile engines and getting closer to China. What's the significance there?
Well, North Korea tested a solid fuel missile engine. Kim Jong-un called it a major step for their nuclear force. So they're clearly advancing their capabilities despite sanctions.
Defiant as ever.
Right. But what's perhaps just as notable is the reaction from China. President Xi sent formal congratulations to Kim and publicly reaffirmed Beijing's commitment to closer ties, closer cooperation.
Wow, public embrace.
Exactly. It highlights the strengthening strategic alignment between them that has big implications for Northeast Asia and for the broader global power dynamics, especially as democratic alliances face challenges.
So let's try and pull this all together. We've gone from currency jitters over inflation data and potential BOJ shifts to trade spats tangled with capital markets, the U.S.-China tech race, OPEC's balancing act, gold hitting records, and these really tense geopolitical hotspots. What does it all mean for you listening? It's clear these aren't separate stories, right? They're all connected.
Yeah.
Currency moves react to geopolitics, trade talks get influenced by tech security, commodity prices reflect global demand, and risk appetite. It's all interwoven.
Precisely. These aren't just isolated data points. They're pieces of this huge, dynamic, global puzzle. And making sense of it requires, thinking critically about those connections. Markets aren't just reacting to one thing. They're constantly trying to process central bank hints, tariff negotiations, commodity swings, and these rising geopolitical dangers all at the same time. Understanding how these pieces fit together, that's the key to seeing the bigger picture, maybe even anticipating what might come next.
Yeah. And that leads us to a final thought for you to consider. We've talked about all these pressures on currencies, like the yen potentially shifting, central banks buying gold, and the huge strategic importance of technology in trade and security. So thinking about those shifting alliances we mentioned, like China and North Korea and the ongoing military developments, how might all of that reshape not just economic policy, but maybe the fundamental balance of global power in the months ahead, something to keep mulling over. That's our deep dive for today. Thanks for joining us. We'll catch you next time.
Thanks for listening to the Financial Source podcast. If this podcast helped you at all today, would you consider leaving us a review to help spread the word? Each month, we also give away different resources and indicators just to podcast listeners. So write into Financial Source at support@financialsource.co to claim your free gift today. Talk to you all in the next episode.